All right, get ready, because today we're going deep on maximizing that tax refund.
Oh, yeah.
You sent over that Carlton Dennis video,
Hmm.
how to boost your tax refund safely. And
Good stuff.
I got to say, he makes some really interesting points.
He does.
You're clearly looking to, get the most out of your return.
Absolutely.
So we are going to help you do just that.
All right.
We'll uncover those deductions that maybe you've missed.
Yeah.
And our tax expert is here to, break down all the details.
Break it down.
So you know what applies to you.
Yeah.
So get this. Did you know hundreds of millions of Americans qualify for refunds every year?
It's true. It's a lot of people.
That's a lot of money potentially being left on the table.
Yeah, and a lot of people, they think a big refund is a good thing.
Right.
But really what it means is you've overpaid throughout the year.
Oh, okay.
So the goal is to try to get as close to owing zero as possible.
Right.
Not necessarily get this massive refund.
See, that's not what I expected to hear.
Yeah, it's more about efficiency. Okay. If you're getting a huge refund, you basically just gave the government an interest-free loan.
Right.
Wouldn't you rather have that money working for you throughout the year?
I would.
That's what deductions and credits are all about.
So how do we unlock these?
Yeah,
Dennis talks about some good deductions,
he does.
starting with the mortgage interest deduction.
Yeah.
Seems like a no-brainer if you own a home, right?
It can be, but it's not always as straightforward.
Oh, no.
You got to itemize instead of taking the standard deduction.
Okay.
And there's a limit on how much mortgage debt actually qualifies.
Uh-huh.
So right now it's $750,000 for couples filing jointly,
Gotcha.
$375,000 for single filers.
Okay, so how do I know
Yeah.
if it even makes sense to itemize?
So let's say your mortgage interest for the year is $10,000.
Okay.
And the standard deduction for your filing status is $13,850.
All right.
In that case, you'd actually be better off taking the standard deduction.
Mm-mm.
Itemizing only makes sense if all of your itemized deductions, including that mortgage interest, exceed that standard deduction amount.
Okay, so it's kind of like a puzzle then.
It is. It is.
Now, he also mentioned the home office deduction,
Yes.
and I feel like that's super relevant these days.
Yeah, with so many people working remotely.
Exactly.
Yeah, definitely.
Yeah.
So there are some requirements.
Oh, quite.
It's really meant for business owners, not employees.
Okay.
And that space that you're claiming has to be used exclusively for work.
So if I, check emails from the couch sometimes,
Yeah.
that doesn't count.
Not quite, but you could actually calculate a percentage of your home's square footage
Okay.
that is dedicated just to work.
Great.
You might be able to snag a portion of the deduction.
Oh, I like
It's
that.
about being strategic.
Finding those savings.
There you go.
All right, what about the student loan interest deduction?
Yeah,
I know a lot of people are struggling with student loans,
they are.
so I'm sure they're listening closely for this one.
So you can actually deduct up to $2,500 in student loan interest,
Okay.
and that directly reduces your taxable income.
All right.
Think about it. If you owe, let's say, $50,000 in taxes, that deduction could save you almost 5%.
It's a good chunk of change.
It is.
Okay, so next up, retirement contributions.
All right.
Dennis really emphasized maxing out those 401ks and traditional IRAs.
Yeah, those are powerful tools.
Okay.
You're making those contributions with pre-tax dollars,
Mhm.
meaning they lower your taxable income right away.
Nice.
So in 2023, you can contribute up to $22,500 to a 401k,
Gotcha.
or even $30,000 if you're 50 or older.
Oh, so you can contribute more if you're older.
You can, yeah.
That makes sense.
Catch-up contribution.
Playing catch up.
Yeah.
What about a Roth IRA, though?
Yeah, Roth contributions are a little different.
Okay.
You make those with after-tax dollars, so they won't lower your current taxable income.
Oh.
But the benefit comes later.
Okay.
When you withdraw that money during retirement, completely tax-free.
Hmm.
It's a trade-off. Immediate tax savings versus long-term tax benefits.
It's like choosing a small reward now
Yeah,
versus a big reward later.
exactly.
Decisions.
Right.
Okay, what about charitable donations?
Yeah.
I love supporting causes I believe in.
Mhm.
Does that have any tax benefit?
Absolutely. If you itemize, you can deduct those charitable contributions
Okay.
to qualified organizations.
Mm-hmm.
You can deduct up to a certain percentage of your adjusted gross income.
Got it.
That's your total income before any deductions.
Okay.
So make sure you keep those receipts.
Keep those receipts.
Yes.
Okay, Dennis also talked about HSAs,
Yeah.
health savings accounts.
Hmm.
I gotta say, This one has always kind of confused me.
HSAs are great.
Okay.
They're a fantastic way to save for future healthcare expenses
Okay.
while also getting a tax break right now.
Oh.
Your contributions are tax deductible,
Right.
and the money grows tax-free, just like a 401k. But here's the catch. You have to be enrolled in a high-deductible health plan to be eligible.
Ah, so you're investing in your health
Yes.
and saving on taxes at the same time.
At the same time.
Okay, this is a lot of info.
It is.
I'm starting to see why dentists stress talking to a tax professional.
Absolutely. Tax laws can be complex.
Yeah.
They change frequently.
Yeah.
And, a professional can help you navigate it all.
Right.
Personalize your strategy.
Yeah.
Make sure you're not missing any opportunities.
It's like having a tax superhero
There you go.
on your side.
Exactly.
All right, now let's move on to those rock star credits.
Yes.
That can really impact that refund.
Let's do it.
Ooh, tell me more about these rock stars.
Okay, let's start with the child tax credit.
Huh.
This one's a game changer, especially for families with young children.
Okay, yeah, how does that work?
Well, for each qualifying child under 17, you can get a credit of up to $2,000.
Okay.
And here's the best part. A portion of it is refundable, meaning even if you don't owe any taxes, you could still get up to $1,600 per child back.
Wow, that's significant.
Mm.
Are there any income limits on that?
There are, but they're pretty generous.
Okay.
So for married couples filing jointly, the phase-out begins at $400,000.
All right.
And for single filers, it's $200,000.
Good to know.
Yeah.
What about the lifetime learning credit?
Yeah,
Is this something I should be looking at for my professional development courses?
it could be. The lifetime learning credit can be used for all sorts of educational expenses, like undergraduate and graduate courses,
Okay.
even professional development programs.
Cool.
You can claim up to $2,000.
Right.
And the best part is there's no limit on how many years you can claim it,
Oh, wow.
as long as you're enrolled in a qualifying program.
That's great. I'm always trying to, learn new things and keep my skills sharp.
Yeah,
So I'm guessing there's probably income limits on that one too.
you are correct. There are.
Okay.
It phases out for individuals earning over $90,000
Okay.
and couples earning over $180,000.
Got it.
And another thing to remember, it's non-refundable.
Okay.
So it can reduce your tax liability down to zero, but it won't actually give you a refund if you don't owe any taxes.
So it's a good way to lower my tax bill, but not necessarily pad my refund.
That's right.
Gotcha. Okay, what about the child independent care credit?
Yeah.
I know a lot of working parents who, struggle with child care costs.
Yeah, for sure. This credit's designed to help offset some of those costs.
Oh, that's great.
So it covers expenses like daycare or babysitting
Yeah.
for children under 13,
Right.
or for dependents who can't care for themselves.
That's huge for a lot of families. How much can you claim with that?
It depends on your income and expenses,
Okay.
but families with one child can claim up to $3,000 in expenses,
Okay.
while families with 2 or more children can claim up to $6,000.
Got it.
And the percentage of those expenses that you can claim as a credit ranges from 20% to 35%,
Wow.
which can really add up.
That could make a big difference.
It can.
Okay, now Dennis also touched on medical expense deductions.
Right.
Hopefully we don't have any major medical bills.
Yeah,
But good to know that's there.
absolutely. So you can actually deduct unreimbursed medical expenses that exceed a certain percentage of your adjusted gross income,
Okay.
your AGI.
So that's like our total income before any deductions.
Exactly.
What percentage are we talking about?
Currently, that threshold is 7.5%.
Okay.
So let's say your AGI is $100,000.
All right.
You could only deduct expenses exceeding $7,500.
Got it. So it's kind of like a safety net
It is.
for those unexpected medical costs.
Exactly.
All right, we've covered a lot here.
We have.
From deductions to credits.
Yeah.
It is a lot to take in.
It is.
No wonder Dennis kept stressing, talking to a professional.
Yeah, he's absolutely right.
Yeah.
Tax laws are like a constantly shifting landscape.
It feels like it.
And everyone's financial situation is unique,
Yeah.
A tax professional can help you make sense of it all. Identify every deduction and credit that applies to you and create a strategy that's tailored to your needs.
So it's like having a personalized roadmap
Yeah.
to navigate this whole tax maze.
Exactly.
So what's the biggest takeaway you want our listener to walk away with today?
Knowledge is power.
Okay.
Understanding these deductions and credits
Right.
can empower you to potentially lower your tax liability and boost your refund.
Yeah.
It's about taking control of your finances, making informed decisions that benefit you both now
Okay.
and in the long run.
I like that. And did us briefly mention how, the wealthy often use tax strategies.
Yeah,
And not just for bigger refunds, but to build long-term wealth.
I do.
It's like they're playing a whole different game.
Right.
And you can play that game too.
You can.
This deep dive has given us a taste.
Yeah,
But there's always more to learn.
always.
Are you feeling inspired to explore some, more advanced tax-saving techniques? Maybe delve into some investment strategies to minimize your tax burden.
I like it.
Ooh, it's like opening a door to a
Yeah.
whole new world
There you go.
of financial possibilities.
That's right.
All right, this has definitely sparked my curiosity.
Good.
But before we get too carried away, let's recap what we talked about today.
Okay. Sounds good.
All right, let's rewind and hit the highlights of what we learned in this deep dive. First off, that tax refund, that's not a bonus.
Nope.
It's literally just getting back money you overpaid.
Right.
So the real win is minimizing how much you owe in the first place.
Absolutely.
And that's where deductions and credits come in.
They're your best friends.
Right. Okay, so we talked about some awesome deductions.
Yeah, we did.
Mortgage interest, home office expenses, student loan interest, charitable donations, even medical expenses. It's like a whole toolbox.
Yeah, it's all about finding those that apply to you.
Exactly. And then there are those rock star credits.
Oh, yeah.
The child tax credit, the lifetime learning credit, the child independent care credit.
Huge for families.
Especially for families, right? And anyone pursuing education. Those can seriously impact your refund
For sure.
or even help you get money back, even if you don't owe any taxes.
That's the best part.
Oh, and don't forget about maxing out those contributions to your 401k or traditional IRA and that HSA.
Smart move.
It's like investing in your future while reducing your tax burden today.
Exactly. You're doing it all at once.
I'm telling you, I've learned so much from just this one video.
Good. I'm glad.
It's like a whole new world has opened up, Dennis even mentioned his tax alchemy course. He goes even deeper there.
Oh, yeah, I've heard of that. That could be a good next step for you.
I'm definitely intrigued.
Nice.
But even just knowing about these basic deductions and credits, it's empowering.
That's what we want.
I have more control over my finances now.
Exactly. That's the goal.
So any final words of wisdom for our listeners? What do you want them to take away from all this?
take control. Don't be scared of taxes.
Right.
There's help out there, resources to figure it all out.
Definitely.
This deep dive, this is just the start. You're on the right path now.
I think that's a great note to end on. Knowledge is power, right?
It really is.
Understanding your taxes, that's how you keep more of your hard-earned money and build a brighter financial future.
Couldn't said it better myself. Go out there and conquer those taxes.
And remember, there's always more to learn.
Uh-huh.
Until next time, happy saving, everyone.